Hello everyone, my name is Tassos Kotzanastassis. I'm the founder and managing director of AG Capital Partners. We're a private equity real estate firm. We've got principal activities in Asia through the Hong Kong office and advisory activities in Europe. Advisory mainly means workouts, asset management and corporate finance for real estate. Now, in terms of NPLs and REOs in Greece, we've been fortunate enough to be involved in a number of transactions and projects. We've worked for banks. We've been involved in debt-to-asset swaps, which has been quite popular in Cyprus and is now catching up in Greece. This has implications for opportunities to come on. We've managed the first ever REO portfolio mandate to come to the market. That was back in 2014. We've been involved in loan restructurings and recapitalizations, as well as sell-side advisory. And also, as of late, we've been working with investors and services who are entering the market. Why is NPLs an interesting topic for real estate investors? Well, in Greece, the level of NPLs is about 100 billion. And that's about as bad as it gets in Europe. That's an NPE ratio of 50%. It's about 60 billion of corporate loans, 27 of mortgages, and the rest is consumer. Now, one of the main problems of the Greek banking system is that it has been collateral-based. It's not about the cash and your repayment ability, it's about what collateral do you have to offer. Which means the banks have now found themselves loaded with real estate collateral. So by some accounts, about 60 to 70% of NPLs are collateralized against real estate. So that's the sort of property assets that the banks have locked themselves into. The Greek banking system has set itself, in agreement with the SSM, a very, very ambitious target to reduce those NPEs by 40 billion by the end of 2019. What they're thinking of doing is having write-offs of about 14 billion, 7 billion of sales, and the rest through collections and liquidations. Is it going to happen? My answer is the blue sky, lovely font there for the graph. I think that's a tall order. I don't think that's going to happen for various reasons. A small footnote on Cyprus, only because those who are interested in Greece have also been to Cyprus, look at the market. The NPL problem is equally bad. The NPE ratio is near 50%. Being a smaller market, NPEs are only about 22 billion. NPE cover is low. What is interesting is the recent announcement by the governor of the central bank who said that resolution has been very, very slow. So we should expect more drastic action in the NPL resolution. Now, instead of talking about statistics and numbers, I thought I'd give you some recent transactions which set the flavor of what's actually happening into the market. As you can expect, hotels and hospitality is a darling of the market. We've seen a few transactions. The one on the top left is the recent acquisition of the former Marriott Hotel in Athens, a joint venture by the US developer Hines together with Henderson Land. That was sold by one of the banks who actually, interestingly enough, held it for... Sorry, no, that was a repossession. I was thinking of the held. The one to the right is a joint venture between the US private equity fund Oaktree, who have teamed up with a local developer stroke hotelier. The plan is to roll out 200 million into the market to invest in hotels, refurb, acquire from banks, and then create a good portfolio. The third on the right is the one I was thinking of. That's the Hilton Hotel, which interestingly enough was held by one of the systemic banks as a core asset. Now, after years and years of pressure by the central bank, they finally sold it. Everyone and anyone who was interested into the market bid for it. And it actually went to a joint venture between Doğuş, which is the third largest Turkish conglomerate, and a local developer. The last one, it's perhaps the least expected transaction. It's not about the transaction, it's more about the partners who are into it. The transaction is the recent acquisition of a very large plot, which is going to house the development of a hotel and some ancillary activities. The people behind it is a local REIT, which is actually controlled by Fairfax Financial from Canada, who is a big investor in Greece, who have teamed up with M&G Investments from the UK on a 50-50 joint venture. I mean, that was actually a surprising development because private equity funds have been knocking into the market, but now you see more core investors coming in. In terms of retail, you had a checkmate moment a few months ago when the largest developer, Lambda Developments, set up a REIT to house their standing investments. They were looking for partners, and Varde partners from the US acquired a 30% stake into the transaction, which just actually shows that this activity in the retail space as well. In terms of NPLs, there's two transactions now into the market. There's a smallish one, about 300 million, which is in the last stages, and there's one that's only come up to the market, one by the systemic banks, 1.3 billion. Some people say it's quite large for a kickstart, but it just shows the appetite of the banks to get things going. Now, in Cyprus, very small market, but again, many people who look into Greece have also ventured out there. As you might imagine, the interest is focused on hospitality and residential, just because of golden visa and passport. The transaction, the project there is the marina in Ayia Napa, which is developed by Egypt's largest conglomerate, Orascom, one of the leaders in telecoms globally. REOs, the Cypriot banks have been quite active in doing the so-called debt-to-asset swaps, which means that they found themselves with swathes of property. They started onboarding, as they called it, maybe 2-3 years ago, and now it's time to dispose. Interestingly enough, the CEO of the island's largest bank, Bank of Cyprus, stated in an interview 2 days ago that they wish to expedite the program of disposals, and they wish to see more drastic solutions, maybe through structured transactions. So watch the space. Maybe you'll hear more news in the next few weeks. Now, in terms of the opportunities, people have been talking about NPLs. Everyone is drooling about the portfolios that are going to come onto the market. I think it's going to be a trickle. I don't think there's going to be much there, mainly because the banks are undercapitalized. They cannot stomach the capital losses. So in my personal view, there's going to be a slow flow of NPLs. I mean, in the grand scheme of things, in the 100 billion exposure, and that's going to be backloaded. So it's going to be more towards 18 and 19. What I think is going to be more interesting for investors is the recapitalization plays. We've been working with banks on a couple of those schemes. We're now hopefully completing one such transaction. It's quite interesting. It's a pilot transaction, which, if it goes well, it's going to set the blueprint for others. It's about a shopping center in Greece, which had been underperforming. The bank had considered selling it. The offers were miserable, so they decided it's going to be a massive haircut. So what we have done, we've devised a new business plan, which sort of sets the center into a good trajectory as a destination. And we've invited investors to contribute the capital for the capex on a super senior position, and then set up split balance structures whereby the investor has various exposures. So investors can come in, the bank doesn't take the loss, the asset gets going again. So I think we're going to see a few more of these transactions. In terms of sectors, I know everyone is thinking about hospitality. So if you want to do that, you may as well stand in queue. Everyone who comes to Greece, everyone who speaks to me is asking about hotels. Yes, they're going to be hotels. Everyone finds it interesting just because it relies on the foreign demand, not on domestic demand. Just so you understand the context, there's only about 7 billion loans in the hotel sector out of the 100, and the NPLs are about 3.5 billion. So there's going to be there's some stress in the market, but it's not that problematic. Having said that, I think there's going to be a number of joint ventures with a few preeminent developers and operators who are quite adept and skilled in managing and refurbishing hotels. So we're going to see a few joint ventures in getting old stock from bank, maybe developing some new stock. Quite an interesting sphere. In retail, domestic demand is quite subdued. But what's interesting is that the high street has lost maybe forever to shopping centers. So we've seen a consolidation in the trade and demand towards shopping centers. So with the exception of the maybe 1 or 2 prime streets in each city, I don't think the the high street sector will ever bounce back. Office and industrial is quite interesting in the sense that they rely on domestic demand, and as Alice mentioned, a recovery is quite anemic. What's interesting about those sectors is that they've been starved of capital and new stock for the last 10 years. So you can imagine the decent stock is very, very little. Prime rents have actually started growing in a nascent economy. What's on people's mind is, shall we develop? The answer is not yet, just because the rental values and capital values are below replacement costs, so it doesn't really stack up to develop. But just watch about the upturns in the rental values, which are going to render those feasibilities, those projects viable. In terms of residential, I've been speaking to friends from Spain some time ago who said, don't worry, because when the market starts picking up, residential will be the first sector to recover. I think it's not such an easy call. And the reason is that we've had a massive brain drain from Greece to all over the world. The demographics look horrendous. So I think the residential market is in a difficult place. There are some hotspots in Athens, in some of the islands and so on. There's some deals to be done, but it's not a sector-wide good bet. In terms of Cyprus, as I said, the central bank is looking to accelerate resolutions, so I do expect to see some NPL transactions. The main problem in Cyprus that people don't speak about is the private sector debt. Households are deeply into the red. We're talking about 250% of their income debt, which means that you cannot buy a bigger house, you cannot buy a second home. Demand is going to be subdued. So again, subdued. So in terms of opportunities, I would again advocate those property sectors who are focused to foreign demand, which is hospitality and second homes.